Hello, everybody. Welcome back to Godspeed Today. I'm your host, Riley Roseby, the man behind Godspeed. I'm pleased to be joined by Phil Pearlman. Dr. Phil Pearlman, how are you doing today?
I'm awesome, dude. It's great to be here and it's great to see you doing this. I love it and it's fantastic.
This is amazing. I'm super grateful to have you on here because you have a wealth of knowledge. And the title of today's program is Party Like It's 1992. Now, I want you to walk me through a little bit. We don't have to go too deep into your background, but I remember you telling me you had a day tech account in 1992 or in the early 90s when I was in diapers, maybe before I
Yeah,
was
I had a
born.
Daytech account in the 90s. And the reason that I picked 92 as a date is because that was the year that AOL went public. And, that's going back 30 some years already. But let me tell you, AOL was quite an incredible company. And it was quite an really incredible stock for many years, for about 8 years until they bought Warner Brothers and the Nasdaq, of course, crashed and it all came tumbling down. But it's a good symbolic. I think 92 and the year AOL went public is sort of has some symbol. I'm not going to say a 1-to-1, but some symbolic significance, some symbolic reference to where we find ourselves today.
Can you walk me through that a little bit? Like, why do you think this market, because we were in crypto kind of during the crazy crypto bubble, we saw that go. Why do you think this time is different? And I hate to even say that, knock on wood, but
I
like,
don't
is
think it's
AI
different.
and okay,
I think there's differences,
yeah.
and I think that qualitatively there are also incredible similarities, and the similarities are really human nature based,
Mhm.
right? So as long as humans are going to be involved with markets, there is going to be irrational behavior, irrational exuberance, to use what's his face, Greenspan's terminology. And we'll
Yes.
talk a little. We could talk a little bit about that too. But if you
Before
were
we talk
there,
about that, before we
go
talk
ahead.
about that though, you just talked about humans acting irrational. So, okay, if this is 1992, theoretically, we got 7, 8 years of an uptrend ahead of us in this whole AI infused paradigm shift. How should investors be positioning themselves? Because we're going to have some very volatile moves. We're talking volatile stocks. Some of these high growth names don't even have revenue. They're just moving based off the narrative. Like, how should we be positioning ourselves as well as trading around these long-term positions to capture the most upside?
I have no idea whether we have 8 years left of anything. I have no idea what the time frame is. I just want to be very clear about humility, because even though we have some clues, the human nature part's the same. Like, we're going to overshoot spectacularly because this cycle is spectacular. But I have no idea how long it's going to last. And I really have no idea how deeply we are into it. I have some idea. I have some guesses. I think we're earlier than later. So I think there's more than not. And everybody always thinks it's near the end, every single fucking time. And, to go back to Greenspan, people don't remember this, but Greenspan gave that speech, the irrational exuberance speech, like December 96. So there was 97, 98, 99. There was 3 years left of the most impressive bull market in history when he came out and was talking about irrational exuberance. So he was way early. He was early enough to be wrong, really. And so let's take a look at so humans are going to overreact. And one other thing before we take a look at this chart, I there's similarities, and the similarities of human nature, and then there's differences, right? So we're seeing these tech cycles that are incredible, right? I mean, we have the internet. Wait a minute. We had the semiconductor. right? Amazing. We had the internet years later. Amazing. We had the iPhone launch. Amazing. We had crypto, arguably amazing. We had, and now we're having AI, absurdly amazing. And so the scale of these things are increasing freely. This is awesome, dude. Great to have, you're awesome. Great to have you here and shouting us out. I appreciate it. But this cycle, I think, is where every cycle has been larger. And this technology, this series of technology booms, you could look at it as one mega cycle. You could look at it or one mega cycle, or you could look at it as a series of smaller cycles. However you look at it, if you're looking at it, from more of a cyclical point of view, this cycle is going to be, it seems to me, this one is by far the largest. So the internet was incredible, and it changed the way everybody lives almost instantaneously. It
Almost
took years.
instantaneously, but it took years because, the population of folks who are working from home directly following the dot-com bubble was few and far between. Now it's, almost ubiquitous that like we're working from home. This is what the world looks like.
There's so many signposts along the way. Moore's Law is just littered with these incredible signposts, one thing after the next. I mean, the scaling of the internet, which was AOL. It was later than 92. It was like 97, 8, 9.
I mean, I remember having an AOL instant messenger.
Amazon.com was the scaling of the internet. AOL was the early scaling of the internet. eBay was the scaling of the internet. And then you started to get into like Web 2, where you weren't just consuming, but you could also publish. That was massive. So we've seen like these massive byproducts, these massive signposts along the way. Now with AI, I think my impression is it's just each one has gotten bigger. And I think with this one, Facebook and Twitter were bigger than AOL. And iPhone was bigger than WordPress. And now this one is bigger than all of them combined. Like, this is just so massive. In fact, the data centers and the requirement of energy is a symbol of the massiveness of this cycle.
Well, and Meta just announced a 20-year deal with Constellation Energy yesterday. And I mean, I can honestly say I don't ever remember seeing a multi-decade deal with a real company, two real companies come through where it's that duration and that scale. I do want us to take a look, though. We have a chart, the NASDAQ 100 index. And if, going back to 1992 to the top, we'll just call these annual candles. To 1999, the NASDAQ 100 was up 1,750%. An absolutely astonishing move. Now, do you think we are in for a, what would that be? 10x move in the NASDAQ here in the next decade? Or do you think that's,
I have
fugazi
no idea.
Fairy dust that we can't necessarily put our hands on?
I have no idea. But I do know that we're, as a collective, the sort of, the human collective right now has become incredibly oversensitive to volatility. And so, which is actually kind of bullish because people get very, very bearish very, very quickly, and you create these mini capitulations. It's a whole other discussion, but it's very fascinating. We're very emotionally volatile.
Let's dive into that a little bit. If there is this heightened volatility and this heightened emotional volatility, let's say, there's some investors that want to participate in this thing for the next 10 years, but they don't want to be day trading. Like, how should they be positioning themselves? Just buying VOO, buying the NASDAQ 100 a little bit every month, and, just taking advantage of the market cap weighted world that we live in? Or are there other things that maybe you would have liked to have done during the dot-com bubble that you might institute and practice today?
You know, the human ego is such a thing, right? Because no matter how well you do, there's always somebody doing better than you. Like, unless you're Usain Bolt or John Coltrane or Michael Jordan, or unless you're like the best in the world at what you do, there's always somebody better. And so it's very, very difficult to not have ego. So, but each person has to look in the mirror, and each couple, you know, like if you're married out there, you should talk about it with your better half. You have to decide what you're looking for and what you want. And if you're looking for a certain type of life and you're on the path to getting that, then you don't need to take crazy bets. If you're really young, you could take some crazy bets. I mean, I bought AOL, and like that's my that was the bankroll of my life. I didn't have much. I had like 20 grand. I took a chunk of it, I put it in AOL pretty early, and I got pretty lucky with it. You know, I mean, I didn't really know what I was doing. I was like, America Online, this is going to be huge. I was saying the same thing then, you know, like that I'm saying now. Yeah. And you know, had like a 10 bagger or a 14 bagger or whatever it was. And looking back, it wasn't that much money, but it was a huge amount then.
It's all relative, right?
It's all relative. So when you're young, you could afford to take the gambles. You know, like I know you're an archer, and I love that because you're like, first of all, I
do gotta say though, I scaled back a little bit in the last pop because I mean there's some heuristics that I've been looking for that haven't been achieved. But yeah, I mean, to your point, I'm an archer because that's the future of transportation, advanced air mobility. These
you're
nuclear
trading
names
around
for
it, right?
Yeah.
Nothing wrong with trading around it if that's your approach to the market. As long as you have defined your approach to the market, as long as you have defined your risk, and as long as those, you know, your methodology and your risk management approach are rational and are in your wheelhouse, you're knowledgeable about them, I got no problem with it. For me, you know, you asked about like, what do you do with it? To me, this is going to be a party for everybody. It's going to spread out to everybody. One of the buzzwords in the .com time was efficiency, right? Like operating efficiency. Everything was getting more efficient. Like all of a sudden, just imagine there was a day that was like 30 years ago, or maybe 40 years ago, where there really wasn't, everybody didn't have Excel, right? And certainly everybody didn't have the type of shareable tools that we have now, you know, whether it's Sheets or Google Docs. And so productivity and efficiency, those were the buzzwords. They were just this much of where we are now. Like we have become so much more productive. We have tools that...
It's funny you talk about efficiency being a buzzword because I do feel productivity is now, you know...
Productivity was then.
And it's coming back.
I don't mean that in a bad way. I'm not saying productivity is a buzzword in a bad way. It was real. My view is you could buy the S&P 500 because the AI productivity enhancements are going to trickle down to every company in the world. Everybody's going to be able to use them just the same way as we went through sort of this logistics revolution, right? All of a sudden with the internet, I got a package coming to me. I can go look up right now and figure out where it is and when it's going to arrive at my house in like 3 seconds, just by looking up on the internet. You know, just by clicking a button from UPS or whatever. And, you know, Amazon sends me an email. Hey, your thing is on its way or whatever, you know. It's freaking 30 years ago, there was nothing like that. Not even close. So where we're heading is exactly the same. And humans are horrible information processors. This is a heuristic, right? We are horrible. We are, to use the computer metaphor, we are Commodore 64s. We are not Gemini, right? We are the
I'm aging myself and I don't even know what a Commodore 64 is.
You don't even know what a Commodore 64 is. Commodore 64 had a floppy disk that was like the size of a Buick. You know what I mean? Like, you had to like
Brutal.
put the, dude, I remember having this computer. I had a Mac SE just to get Microsoft Word to work. I had to like put a disk in, take it out, put another one in, take it out, put another one in, take it out. And then to save a document, I had to put the disk back in, take it out, put the disk in, take it out until I got an external hard drive that was huge and it had
Massive.
like this much memory on it.
It's
I could save like 5 term papers on that, you know. Now it's the completely the opposite. You have a phone that has 20 million thousand more
it's got too much on it at
processing
this point.
power.
It's
What's
got way
that?
too. I said it's got way too much on it at this point. If
It's
there's
got more. It's
anything,
got too much on it.
if there's anything
It's,
killing our productivity, it's the advent of social media and all this other stuff.
Listen, so let's talk about. Okay, we have two things we have to talk about. We have to
Okay.
talk about these candles, the 99 candle and the 98 and the 99 candle.
Yep.
Okay, because yes, Tanya, it was all kinds of floppy disks. It took like 4 days to load, and then you could do the wrong thing, or you know you get a phone call and you have to start all over again. Like it's like unbelievably hard. It's a comedy. You know, it's like our equivalent to like I used to have to walk 8 miles in the snow to get to school in the morning. It's the same thing. That's a great comment, Tanya. So let's look at these candles, 98 and 99. Okay.
98 was up 85%, and 99 was up 101%.
This is not a stock we're talking about. We're talking about the NASDAQ 100 index. We're talking about these Microsoft, Intel, Cisco, all of these very large technology companies of the internet revolution. The market was up 100% 2 years in a row. What did you say? 89% and 100 and something percent? 99, 98?
But here, let me show you this. Let me show you this next one, Phil, because this is Amazon. Now they were a little bit late to the party, right? They went public. What is that in '97?
Yeah.
That 98 candle, that second candle, Amazon was up almost 1,000% in that second candle. 966% in 1998. Now we do have to caveat because it was down 80% in 2000. But like, I don't know. I mean, we've seen some crazy moves from like the quantum stocks and stuff like that, but it doesn't seem like we've seen the absolute euphoria that would elicit a NASDAQ 100 going up and doubling in 12 months.
My sense is that we are nowhere close. And the market just feels much larger and much less monolithic. Like there's so many more markets now. We have global markets. We have crypto is doing its own thing. And you know, I was like saying earlier, like is fartcoin just pets.com? Like I have no idea, but I was just being cute. But there are similarities between fartcoin and pets.com. It's abject speculation. And, you know, that doesn't necessarily mean just because we have Fartcoin and it's abject speculation doesn't mean we have such a heterogeneous or heterolithic, is that even a word? We have such a heterolithic or heterogeneous market now. There's so many pockets. We can have multiple things going on at one time. Where back then, there was really only one thing. And everything was interrelated. And pets.com and Amazon and NASDAQ 100 and Cisco Systems, they were all interconnected. Now we can have crashes in crypto while AI is still going crazy. And we can have tariff crashes and the advancement in AI is still happening at breakneck speed. I mean, there's nothing going to slow down the technology advances that are taking place right now. They're comical.
Okay, so I do want to ask, so like, what are some heuristics that we should be looking for, you know, irrational exuberance? Like, yeah, if I get in an Uber and my Uber driver's pitching me the next great AI stock that's going to disrupt Microsoft, like, are those the kind of things you're going to be looking for before you're like, okay, like this is, you know, the party's been going, this is getting a little crazy? Because it's impossible to call the top, but like, how are you
It's
viewing
really much more difficult now because the market is so much more, the world is more complicated and the markets are more heterogeneous. There's so many pockets in the markets. You have a crypto market, you have energy markets and commodity market. I mean, you always had different markets, but everything was moving together back then, you know? And now you have things that sell off while other things are working. I mean, we had a terrible first 5 months of the year in this country. We're flat for the year with a lot of volatility. I mean, what's worse than that? Where, you know, the market goes down 25% and you're flat for the year. Like there's not like it's like all of the cost, all of the emotional costs with zero gain, right?
Yep.
It's the worst of all the worst. It's worse than even being down almost, because when you're down, at least everybody's depressed together. It's horrible, and you know it's horrible, and it deserves to be. This one, you're just getting fucking whipped around by your emotions, and you have zero to show for it in either direction. So it's horrible. But we're so emotionally. I forgot what we were talking about, but
We're
so
talking about heuristics of like, okay, when is the party getting to a close? When is the music about to stop to where you
I
take your
don't
seat?
see abject
Euphoria
right now.
Yeah.
That's at the end of the day, that's what you have to look for. You have to look for abject euphoria. You have to look for zero risk management. You have to look at, yes, the Uber driver or the shoe shine boy. That goes back, by the way, to the shoe shine boy. Early Wall Street days, you know, JP Morgan or one of those early figures is getting a shoe shine, and the shoe shine boy is telling him about a stock. That's when, or it might have been Jesse Livermore. It was like one of those, you know. That's where that comes from. But
Yeah.
I mean, yeah, that's one indication. But now there's so many indications,
Yeah.
you know, that it's hard to just, it's oversimplification to just pull out one. Granted, when you look around you and you just see everybody has completely dislocated from any sense of reality. Reality exists, whether you like it or not. Warren Buffett is right, whether you like it or not. You know, like eventually.
He's also very rich, so like he's
so rich, he proved himself, right? Yeah. It's like in the short term, it is a voting machine. In the long term, it is a weighing machine, and eventually those are right. But how far we can get, and how far can the fundamentals go? I mean, the internet bubble had more than a grain of truth. It had all the truth. I mean, now everything is internet based, and the great companies of the world are all internet based. Facebook, Apple, Google, obviously. Google's the poster child. Amazon, Nvidia is all, you know.
I mean, I don't know. When we're talking about Amazon right now, literally I'm picturing in my head the Amazon.bomb magazine cover. You know, where
that ain't bearish.
Yeah. Okay, so then I want to pivot just slightly because you had a magic moment. Because part of, I think, what sets these paradigm shifts off are, you know, magic moments. The iPhone was a magic moment. The internet, as we've talked about, is a magic moment. You called me up the other day and you said you had a magic moment with ChatGPT.
It was ridiculous.
You gotta walk me through this.
These don't come along that often, but when you have a magic moment, you know it. So I get the Teams ChatGPT. I'm paying for it, getting it for me and my business, and getting it for my kids. We got like 3 people on there. And I start interacting with it, and it's just talking to me. It's answering all my questions. It's mirroring my attitude. I'm a cheerful guy, and I'm like, wow, this is great. And it's like, hey, glad you love it. Yeah. And it's doing work for me. I asked it a question. I do research in the area of like performance and metabolic health. And I'm asking it questions about cognition and metabolic health and, cognitive performance, health span. And it's asking me perfect questions back before it does its research. This is like the deep research ChatGPT. It's doing, and it asks me great questions. It mirrors my vibe, and then it writes this perfect report of exactly what I was looking for. And then it was like, and then I started asking it questions about, can you write in my voice? And it was like, yeah, just download some of your writing samples, and we'll call it Prime Cuts Voice. And that's that's the name of my newsletter. It was ridiculous.
Okay,
and
so I have a follow-up question. I have a follow-up question. Have you used the voice feature? Are you talking?
I haven't yet, but I'm going to. I haven't yet,
Okay,
but
so
I'm
that
going
might
to.
be another magic moment because when I started using the voice feature and it talks back to me, like it's unbelievable. It's absolutely unbelievable. You're having a real conversation with, the computer and
My
exactly what you're
son
saying.
uses it,
I bet. I
and
bet.
it's insane. Like he's so far ahead of me. You know what I mean? Like he's like, like those prodigies that are playing chess against 12 people at the same time. He's doing that to me. You know what I mean? Like I'm one of the guys playing him in chess, and I'm
And you're
losing to
sweating
him.
bullets and
He's
he's
playing
just
nine
calm,
other
cool,
people.
and
Yeah.
collected.
And I'm
Yeah.
sweating, and he's just like, like that's what the level that my kids are playing at with this. It's unbelievable to see it. But I definitely had an aha moment. I had a first time iPhone moment. I had like there's those videos, those videos where it's like the deaf 3-year-old kid gets the hearing aid and he hears the sound of his mother's voice for the first time and he's like,
Yep.
wow. And it's like feel good video on TikTok or whatever. I had that moment. Like it's happening. And
It's
we're
happening.
so early.
Okay,
We're
so have
Commodore
you had a
64s.
moment? Have you had a like? Because I can't remember. I mean, I can remember the first time I saw an iPhone. Like, still vividly to this day, it was definitely one of those aha moments. I don't feel like I've had an aha moment like that until Tesla full self driving. That was an aha moment, and then with ChatGPT and AI and all these LLMs.
Yeah,
Have you
there you
have
go.
you had other aha moments since then? Because, like you were just saying, they're rare.
The
Like we don't
only
want to
other
be.
aha moment I ever had was with Napster.
Mm.
Napster was my aha moment because I'm big into music.
Speaking
And
of, did you see the Spotify today breaking out all-time highs?
dude, and so to me, the greatest invention of the internet is Spotify and YouTube Music. And it's not even
Yeah.
close to anything else. Like I have any music in the universe in my ears anywhere 24/7 365.
Hmm.
It's the greatest thing in the history of the world. Like to me, that was an aha moment too. But it began with Napster. I went on
Yeah.
Napster and I realized that I could find any song that I wanted. This goes back a long time, and I could find any song that I wanted. And if I had a song that was obscure, like on a CD,
You
and
could upload it.
I could upload it.
Yep. Shout out.
Exactly.
Shout out. What is it? Sean Parker. Shout out Sean Parker. Phil, I
Yeah.
don't want to take too much of your time up. Is there anything
We got
else
one
that
more minute. What's up?
is there anything else you want to chat about? I mean, this thing is insane. We're going to be talking about this for a little while. Like, I've definitely fastened my
Here's the only
seatbelt.
thing I would say is Nick Majoli wrote a book called Just Keep Buying.
Mm,
And he's talking about investing for the long term. Go get that book and just buy. This thing is going to spread out. Take the majority of your portfolio and put it in that and put it in bond market. And then take a small part of your portfolio if you're into this stuff and check out what Riley's doing because he's like all over these crazy companies. Some of them are going to be zeros, but some of them are going to make up for the zeros. Like you're going to have 10 baggers. Like I don't know if it's going to be Archer. I don't know if it's going to be whatever. He's already had a huge one with Palantir, but it's like some of these are going to hit and they're going to survive and there eventually probably will be a crash. Like we were talking about 98 and 99 on the NASDAQ 100. 2000 happened and 2001 happened. So they come back down. But there are going to be some that are massive, massive winners. So take some of your money and just invest it and go slow and just keep buying VOO or SPY or whatever your VT or VTI. And then take a small amount of your money and look to try to hit, Grand Slam home runs.
but even with that, Phil, I would probably lean more into the big cap tech names because they are the ones that are benefiting tremendously from all this AI stuff. And if you're buying these market cap weighted indices, we live in a market cap weighted world. Like Apple's what, 7% now, although I think Apple's got a few flaws or whatever, but like these companies are so large relative to the broad market that even if you're just getting that broad market exposure, you're very concentrated in these big cap tech names that are moving the needle.
Yep. Yep. I love it. I do own some QQQ. It's a smaller portion because, you know, VOO has some of those in there too.
Yeah.
Okay. Dude,
but the QQQ is the 100. It's just 100. It's a smaller basket than the S&P.
Yeah.
So you're going to get a little bit more concentration, a little bit more juice.
Yeah.
But I love the sentiment of just keep buying, because if this thing does last 5, 6, 7 years, like, you don't want to miss the boat.
Yeah, then you just make massive amounts of money. All right, you're the man. Adios.
Thank you,
Love
Phil.
You, bro. Yeah,
We'll see you soon.
We'll
Take
do it
care.
again. Adios.